Hambro is a fantastic firm for international investing. When we arrived here, the firm had an incredibly strong European equity product, had an incredibly strong global and international product, and I think for us it was a real honour to be asked to come and join that roll call of fund managers. I started in emerging markets in 1994, which is pretty much at the start of the asset class, and certainly the 1990s, emerging markets saw a lot of crisis in Mexico and then Asia and then Russia, and having that in the collective experience bank I think has really helped us through certainly the last 7 years, 5 years, which has been very difficult with a lot of a lot of the crises around the world. It's really, I think, given us that longer perspective that's helped us outperform in some difficult market environments.
It's not just the crisis that we have the experience of as well. Obviously, there's some of the changes we've seen since we started in the 90s in countries like China and Brazil have been phenomenal. Visiting those countries during the 90s and seeing the changes that have taken place over the last 10, 15 years also adds to that wealth of experience.
The high rate of growth that emerging markets have displayed is now, I think, a well-known fact, and certainly there can be few developed countries more aware of that than Australia, with its strong trade links to Asia and China. I think, though, as well as having a stronger rate of economic growth and of potential profit growth for companies, what emerging markets also offer now is a more assured growth. There's a lot of challenges facing the developed world, both in terms of government funding and the states of banking systems. Those problems don't really exist in the emerging world, and so in emerging markets, not only should growth be stronger, but governments and central banks have the ability and the willingness to support growth. So from an economic point of view, I think this really does look like an optimal time. And at the same time, valuations look very reasonable. Emerging markets look cheap relative to their history. And certainly we see both the opportunity for strong returns from those markets, and in addition there's a diversification benefit for investors with large investments in their home country to diversify some of that internationally into emerging markets.
I think in addition to that as well, from an Australian investor point of view, obviously Australian investors have a lot of access to commodity related plays in their own market, but I think what the emerging markets also give at the moment is an access to strong domestic demand, countries with strong domestic demand, places like China and Brazil, opportunities to access the real domestic demand growth story in the world at the moment, and that's really coming from emerging market economies.